It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Vonnie Quinn on assignment this morning. Here's what you need to know. Look out, futures drop as Wall Street CEOs warn of an equity correction. More from the summit in Hong Kong coming up. A guidance boost is not enough. Palantir extending post-earnings decline on lofty valuations despite a sales surge and an outlook raise. And we are live from Sao Paulo at the COP30 Conference for Climate. Don't miss our exclusive interview with the 91 Chief Sustainability Officer. Well, we started out November with tech surging and outperforming, and that being the thing to carry us through. Exact opposite today. An ugly start to the future trade. S&P and NASDAQ down more than 1.5, I should say, for the NASDAQ 100. It is Palantir that is really weighing on this overall equity index, despite the fact the earnings themselves were okay, but it's rallied 150% this year. For the bond market, also weighing on it was a host of Fed speakers yesterday from Daly to Goolsby saying that they are not decided in December. That pressured yields up yesterday. Today, you take some of the heat off. 2-year yields declined by 3 basis points. Your 10-year yield down by just under 3 basis points at 408.13. Let's get you some stocks to watch this morning. With that is Kriti Gupta. Morning, Kriti.
Morning, Danny. Let's start off with Palantir. I mean, you said it there. Solid bookings, solid guidance, solid profits. It is still not enough for this market. Those shares down by about 8%, given the monumental run it has had, not only as an AI stock, a data stock, but also a cybersecurity stock. Remember, a lot of their defense contracts come from the Trump administration. So that is something that's been powering the stock higher today, taking a little bit of a breather. Let me tell you what's not taking a breather. I have to inject some optimism into this trade, and that is iHeartMedia promising to talk about a licensing deal with Netflix when it comes to getting some of their podcasts, their video podcasts, onto the Netflix platform. Those shares higher by almost 17% this morning, although with a grain of salt, the shares are only about $3 and change, but still 16%, nothing to scoff at. A different move, an even bigger move when it comes to Denny's, a take private deal, Danny. This is music to your ears, I'm sure, to the tune of $620 million. Those shares quite literally flying off the chart, higher by 49%.
Kriti, I'm assuming because I like private capital, not because I like Denny's. I have to admit, I literally have never been to a Denny's. I don't know if that's a crime or not, but I'm sure it's delicious. Kriti, thank you very much. We'll catch up with Kriti later in the hour. Also in this hour, we'll be speaking to Morgan Stanley's Andrew Sheets as corporate America and big tech turns to debt markets for their big spend on AI. But first, Wall Street chiefs sounding the alarm on equities.
Of course, it is likely there'll be, a 10 to 20% drawdown in equity markets sometime in the next 12 to 24 months. And I'd say there are very few people in this room that don't think that that's a meaningful possibility. It doesn't mean that the general direction of capital flows, investment, portfolio allocations changing. It just means things run and then they pull back so people can reassess.
Joining us now from Hong Kong to discuss the highlights of that Global Financial Leaders Summit is Bloomberg's Jonas Bergman. And Jonas, it wasn't just David Solomon, it was Ted Pick, it was among others. I have to say, it's not like they were warning about doom and gloom. I mean, this is just a correction that I think a lot of people would probably welcome.
Yeah, I think it was generally, I think, a fairly upbeat conference, to tell you the truth. It was in the fourth year this has been held with all the major Wall Street CEOs and investors. And for Hong Kong, at least, it's probably the most healthy Hong Kong has been. But with people like Solomon, Ted Pick, warning of this potential correction, 10 to 15%, it's certainly people start listening. Even Citadel's Ken Griffin said that we're now very long into a bull market. And then other investors like State Street CEO warned of the Trump administration's immigration policies as being anti-growth. And then we had the UBS chairman warning of systemic risk, potentially systemic risks in the U.S. insurance sector. So it wasn't all sort of upbeat, but people certainly listen when people like this talk about what could happen down the road.
Well, it's also notable anytime you get big Wall Street executives from America in the region, Jonas, because we're also at this moment where it's a détente on trade between the U.S. and China. Did you get any sense that these are CEOs very willing to engage with business in the region?
I think most of them are becoming more upbeat on China and Asia in particular. They mentioned obviously three main pillars of Asia: India, Japan, and China. I think David Solomon, for example, said that the appetite for China is much better than it was 12 months ago, but it still has a way to go. He said because they need more certainty, so to speak, on the trade talks and on sort of to start making those big foreign direct investments into China. He's still looking for more certainty for that. And also, Morgan Stanley's Ted Pick said he was very upbeat on Hong Kong. They see a huge flow in the IPO market here, for example. So things are looking better, but I think overall it's still not back to where it was 4 or 5 years ago.
Hey, Jonas, quickly, can we go back to these Colin Kelleher comments warning about the insurance industry? I'm presuming he was specifically talking about private capital and the rating agencies. What is he worried about?
I think he's worried about a sort of a lax regulation there in the private market. He mentioned, for example, that the insurers are not regulated nationally, but by state to state, which seemed to concern him. So I think, basically, it's the same song in a sense, that where the banks are concerned about, this huge credit markets growing in more lightly regulated areas.
Yeah, and maybe taking more of their market share. Jonas, thank you so much. Bloomberg's Jonas Bergman covering that Hong Kong conference for us. Turning to tech now. Shares of Palantir falling in the pre-market. Maybe this is just concerns of the company's high valuations amid a record run-up because we had sales surging and a beat in its revenue outlook. Joining us now is Matt Bloxham of Bloomberg Intelligence. I mean, Matt, the earnings were good by any measure. What was it, revenue growth of something like 63%? Just how insanely high was the bar for this company? Could anything have made the stock rally after earnings?
I mean, there's always something, but I guess you have to put in context that although that growth rate looks pretty robust, in aggregate, the business is having a run rate of kind of $4.5 billion a year, so it's kind of relatively small. And when you put that in the context of the valuation, it's a close to $500 billion company. So the multiples it's trading on are, pretty extreme by any normal reference. And I think, really to kind of sustain the momentum we've seen recently in the share price, we do need to see even stronger outlook and perhaps, midterm clarity from them about how the business fundamentals are going to grow into that valuation. I think when you look at the numbers, obviously the US business is doing really well, both on the commercial side and with all the US government contracts. The international business, the growth there is kind of more muted, and I think that probably would have been the thing in the results that perhaps would have helped the investor community be a bit more optimistic, or the share price reaction at least, if they had started to show some stronger traction in international markets.
Yeah, I mean, to your point, they're trading at a price to sales of 85. The average index stock in the NASDAQ is at a 3.5, so it's totally out of whack. You mentioned their 2026 outlook and perhaps the lack of visibility in it. Why wouldn't Palantir be able to give the market a more detailed outlook for next year?
I think a lot of that's timing. To be honest, I think it's, we don't see too many companies at this point giving clear guidance on a 18-month or kind of 15-month forward view. The market's moving very quickly. I'm sure they've got a clear view internally with their business plan of what they want to do. To some degree, it's just really about timing of when they release that, get some more visibility on the contracts that they've got coming through, so they know what the kind of base is going to be for next year. Typically we'd expect the 26 outlook to come around the early months of 26 when they're reporting the next quarter.
Hey, Matt, what about AMD? We're going to get their results after the close. What are you looking out for?
Yeah, I think obviously, there's been a lot of excitement around that stock with the OpenAI deal recently. I don't think there's too much more they can say incrementally that's going to excite people about that big deal. I think people are going to look quite closely at their kind of core PC business. Recent results from Intel were better than expected on the PC market. The whole kind of AI on consumer devices is growing traction. So I think people are looking for some optimism there. So that's definitely where we'll be focusing a lot of our attention.
All right, Matt, thank you very much for that update. Matt Bloxham of Bloomberg Intelligence. Now let's get you some other stories that are trending on the terminal this morning. UK Chancellor Rachel Reeves has laid the ground for more tax hikes in a speech. She blamed the previous Conservative administration and global trade frictions for harming the UK economy. Reeves said she was determined to bring down inflation to allow for more rate cuts while keeping a lid on government debt piles and borrowing costs. As we mentioned, UBS Chair Colin Kelleher has warned against looming risks in the insurance industry, citing weak and complex regulations amid an unprecedented boom in private finance. Speaking in Hong Kong, Kelleher said that there's a massive growth in small rating agencies that have been taking the box for compliance of private capital investments. BP profits exceeded estimates in the third quarter. Operational improvements and higher oil and gas production outweighed lower prices. The results signal that CEO Murray Auchincloss is starting to deliver a turnaround plan, which is focused on a return to fossil fuels to win back investor confidence. Coming up, world leaders are gathering in Brazil for the UN's annual climate meeting, COP30. We'll have more on that next, and we'll catch up with your host, Vonnie Quinn. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. In the run-up to COP30 in Brazil, business and finance leaders in Sao Paulo are meeting to discuss navigating climate risk, flattening the emissions curve, and how to profitably increase investment to achieve the best outcome for all parties. You may have noticed that Vonnie Quinn is not here this week because she is there in Sao Paulo. Vonnie, great to see you. I'm keeping the seat warm for you. So what are the critical questions that you've been asking and leaders there are asking at COP30?
Well, Danny, it's always the case that the NDCs are the most important thing for a COP, right? So the nationally determined contributions, these are the plans for the following 5 years for countries that submit them to bring down their emissions, to flatten the curve, to reduce the green premium and so on. In the run-up to this particular COP, we only got those from about a third of countries. Now, I was speaking with the president of COP30 last night about his hopes for this particular COP. He was very enthusiastic, very optimistic, and he pointed out that there will be an annex to the synthesis report, which will include a lot more countries. Now, that synthesis report did suggest that we will not meet the goals of the Paris Agreement, and we knew that already, right? It's likely to show that the gap will be 2.7 or 2.8 degrees of warming, as opposed to what the Paris Climate Agreement had suggested would be 1.5 degrees. So very, very far away. That's one of the things to deal with this COP30. There's also this road from Baku to Belém. So the idea was that at last year's COP, $300 billion was promised to be spent, particularly in emerging markets, developing countries and so on, and that would ramp up to $1.3 trillion, and there would be a concrete roadmap for this at this particular COP. That's the hope as well, that there will be a promise, a concrete promise of that money that's going to be spent somehow down the road. It sounds like a lot of money, but Bloomberg NEF has found that we spent $1.4 trillion alone last year just cleaning up from climate disasters, so things like wildfires and flooding and droughts and deforestation and so on. So it really isn't that much, and there's a lot of hope that the money can be come up with. But of course, hanging over everything and everybody's conversation is the idea that the US has pulled out of the Paris Climate Accord. Now, it doesn't take effect fully for a year, so that will be next January. So technically, the US is still perhaps a little bit in spirit at this COP. But have a listen to what the president of COP, Andrea Dolago, said to me last night.
US will be present through local politicians, governors, but also through business, science, universities, etc. So the US is at the COP, but we would have preferred if the American government was also there.
So, Vonnie, it is clear with that conversation and the other ones you've been having that there are big ideas and big hopes. But can we expect anything concrete, anything that's actually deliverable?
I think we can, Danny. At the same time, I asked the president if there was going to be a cover letter. So this is the letter that comes out typically at the end of some COPs, which, you know, lays out the plans for the next year to the next COP. And he didn't sound too sure that that letter was going to come out. He said that this is going to be a COP that tries to please everybody, from civilian parties to governments to all of the parties that are affected by climate change, but not to expect a cover letter. And that's pretty significant, right? He did say that this is a COP where he wants to show the world that multilateralism can work again. So I think we can expect some announcements out of Brazil, maybe things on deforestation, money to be spent for renewing tropical forests around the world, also maybe a carbon market agreement and so on. But they're likely to be hashed out in the next 2.5 to 3 weeks among countries, and we may see smaller agreements, but maybe no large pledge that we're going to bring down the emissions curve by a certain amount by 2030, like we had seen, for example, with Paris.
Hey, Vonnie, thank you so much for that coverage and looking forward to the rest of it throughout the week. Vonnie Quinn joining us from Sao Paulo. Now, Vonnie also spoke exclusively with the 91 Chief Sustainability Officer, Daisy Streatfeild, about investment opportunities focused on combating climate change.
We are seeing huge amounts of opportunity. I think the mood music around climate negotiations has been quite muted and somewhat negative, but actually in terms of the investable opportunities in those technologies, those companies who are really innovating around the solutions to climate change and the technologies we need to transition those hard to abate sectors is really incredible. And a lot of it is coming from places like Brazil, where we are today. So things around more efficient data centers and how you reduce use of energy in those data centers, through to battery technology and developments in EVs that we see coming out of China. Transport is a huge area where we're seeing developments, and I think there are just really exciting opportunities and not necessarily where you'd expect to find them.
One of the goals at COP30 is to get from Baku to Belém, literally, that is the new roadmap. So to get from the $300 billion that was promised to $1.3 trillion. That would suggest a lot of opportunities for asset managers. Will they take up those opportunities?
I would hope so. I think the IEA says that around 2/3 of the investment that's required in transition and to reach a net zero scenario can be provided by the private sector without any support from the public sector. And so that says there are significant opportunities in those technologies that are already commercially viable for investors to allocate capital. That said, getting to the larger numbers and investing in the things we really need to reduce emissions at both the pace and the extent that we need is certainly going to require policy and support from governments for those harder to do sectors, if you like, the things we haven't really been able to fully tackle yet or fully get to commercial scale. So the likes of sustainable aviation fuel or hydrogen, for example.
Bloomberg NEF estimates that global investments in the low-carbon transition have reached a record $2.1 trillion last year. So that's an 11% growth rate. It's good news, but is it enough to flatten the emissions curve? Is it being invested efficiently?
So a lot of investment that is now going to transition, or you can label as transition, arguably is just investment in sectors because transition is already happening. You know, we already see renewables being the most commercially viable option for developing your energy and grid systems. That is just now an energy investment as much as it is a transition investment, but I'm sure it's counted in the numbers. But ultimately, that's what we need to get to, is where all investments in any given sector, from agriculture through transport through energy, are all actually largely transition or solutions investments because they are contributing to that lower carbon pathway. And I think that's where we still need to see scale up, because we know there are some of those types of technologies where there aren't really easy replacements yet, or certainly not commercially viable replacements.
That was 91's Daisy Streatfeild speaking with Vonnie Quinn on the sidelines of COP30. Coming up, President Trump endorses Andrew Cuomo for the NYC mayoral election. More on that and what else is making headlines across major news outlets. That's to come. This is Bloomberg. Welcome back to Bloomberg Brief. I'm Danny Berger in New York. Let's get you some front page news this morning. What's making headlines on the major publications? First up, on the New York Times, President Trump, very late in the race, endorsed Andrew Cuomo for the New York City mayoral race. That endorsement came just hours before today, Election Day. He said in a social media post that the city will be, quote, a complete and total economic and social disaster if Zohran Mamdani wins. He also threatened to withhold federal funding if Mamdani becomes the next New York City mayor. And we'll have more on the coverage of that race with our reporter Miles coming up. Next up on the Wall Street Journal, a string of alleged frauds by corporate borrowers is spurring a reckoning across Wall Street. Lenders are increasing due diligence and demanding a longer history of financial data from companies. A group of the biggest names in banking, investment management, and accounting have formed a task force to protect investors from future blowups. And on the Financial Times, Norway's oil fund has voted against Elon Musk's $1 trillion pay package at Tesla. The world's largest sovereign wealth fund will be voting against that pay package. Excuse me, they said that they are worried about the size of the deal. Norway's $2 trillion oil fund is among Tesla's top 10 holders. Also, a quick check on markets. It is a negative sentiment for your U.S. future session and really a bid for a haven with both the dollar and the 10-year yield doing better. You have Wall Street executives warning about potential corrections to come in equity markets and a very, very bad day for Palantir after their earnings, after very lofty expectations and high multiples, at least disappointed or didn't give the market as much as it wanted. Coming up, U.S. firms across industries from tech to banking to telecom flock to debt markets. We're going to have more on that with Morgan Stanley's Andrew Sheets. That's coming up next on Bloomberg Brief. It's 5:30 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Look out. Futures drop as Wall Street CEOs warn of an equity correction. We'll have more from the summit in Hong Kong coming up. A guidance boost, not enough. Palantir extends post-earnings declines on lofty valuations, despite a sales surge and an outlook raise. And it's election day in the U.S. New York City voters head to the polls as Mamdani and Cuomo vie for the mayoral post. A tough start to your equity session after a positive day yesterday, the first trading day of November. Breath was bad, and this is what happens when you have tech leading the market. It can also lead it on the way down after Palantir earnings didn't do enough despite a 63% surge in revenue. NASDAQ 100 underperforms, down 1.5%. A tough day for the Russell 2002, though. That's down 1.6% as CEOs from Ted Pick to David Solomon warn of a potential equity correction to come for this market. For the bond market, it is higher for the price, lower for the yields. Perhaps it is because it is a flock to safety with what's going on in risk assets. 10-year yields down 3 basis points, but we're also seeing oil prices decline too. You can see that at the bottom of your screen, down 1.5% rather. Perhaps that's adding to some of the comeback from yields. Your 10-year yield trading at 408.13. Let's get you some stocks to watch this morning. With that is Kriti Gupta. Good morning, Kriti.
Good morning, Danny. We got to start off with where that tech pain is coming from. A lot of it is, can we track down to Palantir? Those shares down by about 7%, but it's kind of a mystery why, Danny. We've got a strong profit story, strong booking story, and even a lift to the full year guidance, which really begs the question from a lot of analysts on Wall Street. Is it worth the lofty valuations and the multiples that it's trading at? Nevertheless, that creating a 7% decline in the pre-market for the AI sweetheart. Let's talk about some positive stories if we can. iHeartMedia having a massive move in its stock. Remember, it's only a $3 stock, so this is a magnified, but still higher by 14%, Danny, because they are partnering with Netflix now. Netflix looking to license their podcast for their expansion into vodcast, onto podcasts on video, and that, of course, is moving the shares up pretty much. It is, however, outshined by none other than Denny's. A massive rise in that stock price. I'm more of a Waffle House girl myself, but there are plenty of fans of Denny's. Higher by 49%, Danny, after a $620 million take-private deal.
I will see your Waffle House and raise you an IHOP. That is where I spent much of my youth on a very late night or early morning. Kriti, thank you so much. Kriti Gupta in London. Now, big U.S. firms are flocking to the bond market. The latest selling coming from Alphabet, around $25 billion in the U.S. and Europe. The team over at Morgan Stanley expects companies known as hyperscalers to spend about $3 trillion on infrastructure like data centers between now and 2028. Joining us is Andrew Sheets, head of corporate credit research at Morgan Stanley. Andrew, it's great to see you. And big tech, not counting the most recent fundraise from Alphabet, have raised at least $75 billion from IG bonds to fund AI data centers. This is an unprecedented amount from big tech. Just how much is it changing the contours of this bond market?
Yeah, good morning, Danny. So this is a huge story. You know, I think for a long time, it's just kind of been a given that the equity market was very tech dominated, but the credit market was not. These same companies that had enormous equity market caps generally ran with very little debt. They ran with very high ratings. They were, you know, significantly underrepresented within the investment grade indices. And so, you know, in some sense, I think we're seeing a healthy rebalancing there. This is a sector that has debt capacity. Many of these companies are very highly rated. They have a lot of debt capacity even before they would threaten those ratings. And so there's a healthy element here where we're creating more diversity within the issuers, within the investment grade market. But this is also, these are big numbers. You know, we're talking about companies that are quickly moving to become some of the largest issuers in the market overall. And that always, you know, creates some questions around, you know, digestion. But overall, I think, you know, this is a trend that's here to stay. There's a lot of tech spending, we think, still to come.
And in terms of the indigestion, a lot was made of, credit spreads, they've widened to their widest since July. But Andrew, that was all of 4 basis points yesterday. And that's all of 10 basis points from the record tightness that we've seen in this market. Are you surprised that spreads remain so tight despite the monster issuance coming in?
Yeah, no, I think it's important. You know, we have seen a little bit of widening, but it is nothing significant. Spreads are still historically very narrow. They're historically very healthy. And, you know, I think that suggests that there is still a lot of demand in this market. And I think importantly, and I think it's important, I think, for listeners to understand, the dominant buyer of credit at the moment, the marginal buyer, we think is very much a yield-driven buyer. They're driven less by the spread. So, you know, the fact that, yes, there's a lot of paper coming, there's a lot of paper coming out of the tech sector coming, but the fact that it is still coming at what we think is pretty attractive yields for this demand. And also, I think the fact that these issuers have shown that they're still willing to issue, that a couple of basis points on the spread is not going to hold them back from the market. I think that's pretty important as well. So again, I think this is a trend that we think continues. We think the hyperscalers still have significant funding needs ahead of them that we're going to see a mix of instruments that address. And I think, ironically, kind of higher yields is healthier for absorption. It would be a scenario where yields drop a lot, where I think we get a lot more worried about where that demand side of credit would eventually come from.
The mix of instruments has also been fascinating to me, Andrew, because you have players like Meta who not only tap the broadly syndicate market, but have also moved to off-balance sheet financing, looking at Blue Owl and PIMCO to do a JV to help finance some of their AI data center spend. If these are companies where creditworthiness is extremely healthy, where they are convinced that this is the future and that it will pay off, why do you think some of these tech giants are moving away from syndicate markets and raising the debt off balance sheet?
Yeah, thanks. So I think this is actually a genuinely really kind of interesting and exciting development. You know, investment grade credit is kind of almost by definition a very vanilla, a very straightforward, kind of almost boring, you know, asset class. I think that's kind of the point. It's a low volatility, low spread, very straightforward, standardized instrument. But I think what we're seeing is types of investment they're very different. They're very complex. These data centers are enormously expensive. They have a lot of different components that need to go into them. There's chips, there is power, there's land, there is electricity contracts, there's insurance. There's a lot of complexity here. And so, you know, when we think about hyperscaler funding and we think about the needs for CapEx looking out in the future, again, you know, we think, you know, $3 trillion of spend between now and just 2028. And if anything, spending's been tracking probably above that number based on what we've seen so far. One is I think you want kind of all options on the table. It's kind of an all of the above funding strategy where some of it's going to come from cash flow, some of it will come from the traditional bond markets, and some will come from these more kind of bespoke, more structured solutions. And I also think that the issuers are aware of optionality, that this is a spending, spending surge that brings a lot of opportunity, but also has a lot of risk. That if you can enter into a transaction that gives you more optionality, that can be valuable, especially if you feel like the cost of that from your kind of corporate finance perspective is still attractive. And I think we are still at kind of a healthy place where the issuers still believe that the extra amount they're paying on these more complex structures are worth the optionality that they're getting. And the buyers believe that they are ultimately getting, increased income, increased spread for something that is ultimately still, quite robust credit risk and ultimately still closely linked to these underlying strong tenants. So I think we're going to see a lot more of these more complex transactions. And I think especially as a lot of credit investors are thinking more across both public and private markets simultaneously, just as part of their general business model, I think you're going to have a lot more investors who can look at these things and compare them across a lot of the sleeves of credit in which it comes.
Yeah, and there's plenty of capital, to your point, capital and demand for that, be it public or private credit. Andrew, thank you so much. Always a pleasure to have you on. Andrew Sheets of Morgan Stanley. Now let's get you some other top stories that are trending on the terminal this morning. European leaders, including German Chancellor Friedrich Merz and European Commission President Ursula von der Leyen, will skip the EU summit with Latin American and Caribbean states, due in part to concerns over angering U.S. President Donald Trump. The low attendance is expected partially because of Washington's increasingly aggressive stance in the region. And First Brands has sued founder Patrick James for fraudulent transfers. Lawyers have alleged that over $700 million was funneled from First Brands directly to James and his affiliated entities from 2018 to 2025, when the company collapsed into bankruptcy in September. And Big Short investor Michael Burry is taking on the AI frenzy. According to MarketWatch, Burry's Scion Asset Management has bought put options covering 5 million shares of Palantir and puts for 1 million shares of NVIDIA. His hedge fund's latest trades hint at the famed contrarian thinks that another bubble is forming. Coming up, Election Day in America, we discuss the key races, including the race for New York City mayor. This is Bloomberg. You're watching Bloomberg Brief. I'm Danny Berger in New York. It's been a roller coaster 12 hours for Palantir. Shares falling in the pre-market after concerns over the stock's premium valuation, despite initially soaring after a strong earnings report. Back with us is Matt Bloxham of Bloomberg Intelligence. And Matt, it's a good point. Originally, the earnings come out. Everyone cheers that they look strong because by many measures they did. Why the turn in fortune?
Yeah, I think it's really this kind of context between where the valuation is and where the revenue is. So what, close to a $500 billion market cap and a business that is going to generate $4.5 billion or so of revenue this year. So there's a kind of really big disconnect there, and obviously growth is really, really good. More than 60% year-on-year growth, and obviously the full year outlook was better than people expected. But I think really to push the shares on from here, you need to see a much more significant alignment between those fundamentals and the valuation. And I think that the US business is doing really well, both on the commercial side and with the government contracts. But I think if there was an area of disappointment for investors, it was that the international business is still a little bit subdued. And so I think the market's looking for stronger traction with perhaps European allies of the US on the military side and defense side, and in the commercial sector too.
Matt, I wonder if there's something to take away here from broader tech that's run up a lot at the moment. Is there a degree to which Palantir is kind of the poster child for very expensive valuations that have very limited room to run from here?
Yeah, I think it is. Poster child, I'm not quite sure if that's the right characterization, but yeah, it's definitely up there, really stretching those kind of valuation relative to fundamentals and what people are really thinking about the mid to long term. So very much a caricature, if you like, of the mid to long term potential of a company compared to what it's actually delivering in the here and now.
All right, Matt, thank you very much for that. Matt Bloxham of Bloomberg Intelligence. And we're also keeping an eye on Starbucks this morning, where the coffee giant has agreed to sell 60% of its China operations to private equity firm Boyu Capital. The $4 billion deal is meant to help its sagging fortunes in the country. Joining us now is Bloomberg's Tala Ahmadi, who joins us for more. Tala, why sell, first of all, sell their China business, and why buy their China business on the part of the private equity fund that's doing so?
Have we seen that Starbucks has sold a majority stake in its China's business to Boyu Capital for a huge value, for an enterprise value of $4 billion. And this gives Boyu Capital a 60% stake in Starbucks' Chinese retail operations. And so this is a big shift for Starbucks, as it opened its first store in Beijing in 1999 and since then has 8,000 stores in the country. As we've seen, it's been losing ground in recent years as Chinese retailers have been leaning toward more homegrown brands and less toward these big Western names. And so therefore it's been having significant implications for the coffee maker.
Well, it's also at a time where there's a hope of a turnaround in the region in general for global brands who are present in China and in wider Asia. Are they doubling down? Are they hoping that fortunes will change for them?
I guess we've seen this growing optimism with these big global brands. So not necessarily doubling down, but there is some optimism because we've seen with Estee Lauder and LVMH, they've reported stronger sales in Asia recently. So there is a bit of momentum that's picking up, but we're not necessarily sure if that will play out in the long term, as executives have warned that long-term growth is very much in its early stages.
Tala, thank you very much. That is Bloomberg's Tala Ahmadi. Now, here in New York City, it's finally Election Day.
The MAGA movement's embrace of Andrew Cuomo is reflective of Donald Trump's understanding that this would be the best mayor for him. Not the best mayor for New York City, not the best mayor for New Yorkers, but the best mayor for Donald Trump as his administration.
We need a mayor who can stand up to Donald Trump, who can get the funding that New York deserves, who can make sure the National Guard does not come to New York. I can stand up to Trump. Trump will go through Mamdani like a hot knife through butter.
Joining us now to discuss the key race is Bloomberg's Miles Miller. Miles, great to see you this morning. You have a long day ahead of you. Does that day result in anything other than Mamdani winning the New York City mayoral election?
It really is going to come down to what neighborhoods vote for him or Cuomo, and when it really comes down to it, it'll be how big the margin of victory is, right? We're looking at a potential for Zohran Mamdani, a relatively, before now, unknown assemblyman who is facing the possibility of getting a 50% margin in voting. How did he get here? You know, registering new people to vote, really energizing low-income New Yorkers, folks on a message about really making rents cheaper and then making buses free, even if those things are not paid for at the start. But I pulled this story throughout the race, overshadowed his opponent by channeling New York's rising frustrations with income inequality. This is a story about Bill de Blasio in 2013. You can basically carbon copy this story and put it onto the story of Mamdani. He's running on that message that helped Bill de Blasio in 2013, and it's sort of propelling him in this race.
Well, that's also interesting because a lot of questions are being asked of Mamdani that I think were asked, at least in retrospect, of de Blasio, specifically his housing policy and this idea of the supply being a big gap in it. As Mamdani has gone on, won the Democratic election, at least for the nomination, how has his message changed, especially with the criticism that some of his proposals aren't feasible?
Right. I think the thing that anybody knows when you run for New York City mayor, run for any citywide office in New York, is that you may be, left of center when you're trying to get these votes initially in the primary, but any person who runs for New York City mayor knows they sort of have to move to the middle, right? Starts with these very lofty proposals, talking about taxing the rich, talking about a rent freeze. Many of these things can't get done without Albany. He's got really a partner in Kathy Hochul saying she'll help him get some of his big proposals done, but taxes can't be changed without Albany. She'll have to work with him on some of these proposals, but the biggest pie in the sky kind of proposals will not get done without her involvement, without the legislature's involvement. But he's gotten the support of the leader of the assembly, the leader of the state senate, who are saying, hey, maybe tax the rich does make sense if you're going to pay for what he's calling universal child care in the city, taking it a step further than what de Blasio did, which was, $3K, pre-K for all.
So he has their support. Notably, Andrew Cuomo has the support of President Trump, who late yesterday posted on social media his support for him. How painful could Donald Trump make things for Zohran Mamdani were he to win?
I think you have to look back to the marches and the rallies that happened during 2016, the first Trump administration, de Blasio taking on Donald Trump. The one interesting thing about this, I think that often gets missed when we talk about Mamdani, is that what he said is Trump campaigned on making things affordable, grocery prices affordable, taking down the costs of prescription drugs. We can actually work together if you want to make New York City affordable. I think that what this will mean is that Trump will, basically be doing his campaigning against Mamdani for, the years that he's in office while Mamdani is in office, but he'll have to figure out how he can be measured and fight, right? I think on the one hand, Kathy Hochul has had an interesting relationship with Trump. He said, let's get rid of some of these, energy projects. The energy costs are too high. And what does Kathy Hochul do? She goes down to the White House, meets with him, and the wind proposal is put back on the table. If Mamdani can do that, he'll have the support of moderates as he goes through. But again, we're looking at a margin of possibly 49 to 50%, the same margin that de Blasio won on, a mandate, and that's a mandate, that would be a mandate for him to get through some of these progressive proposals that, while part of the city, or a good portion of the city, may not support him, but he's got a big, broad-based coalition.
Just quickly, that coalition also looks very different, though, than past elections, doesn't it? The kind of people he's been able to draw out to come vote.
Right. You're talking about new electorates. You're talking about black voters moving away from the normal incumbent or more practiced politicians. You're talking about South Asian New Yorkers getting a new power base in New York. He'd be the first South Asian, the first Muslim mayor. And then on top of that, new voters, right? Voters under 35 who are voting for the first time, feeling like they have a say in this. It's not every time that you see in an election a guy that you saw play soccer at Bronx Science, didn't make it to Model UN, but sure was a good soccer player.
Miles, thank you so much for joining. I'm really looking forward to your coverage throughout the day. That's Bloomberg's Miles Miller. And a quick disclaimer, Michael Bloomberg, founder majority owner of Bloomberg LP, the parent company of Bloomberg News, gave $1.5 million to a super PAC backing Andrew Cuomo's mayoral campaign and has reiterated his support for the former New York governor a week before the election. Coming up, we're going to get you set up for your trading day. More earnings on deck. This is Bloomberg. It's Bloomberg Brief. I'm Danny Berger in New York. Now let's take a look at what's ahead today for your day. Earnings will continue with Pfizer, Uber, and Norwegian Cruise Lines. They report before the bell. It's also Election Day. There's a major focus on the NYC mayoral races and governor races in New Jersey and Virginia. And we'll get more earnings after the bell. AMD, Pinterest, and Rivian will all report. A quick check on your markets as we head to the end of the hour. S&P 500 futures off of the lows that we've seen. They're down about 1% after Palantir earnings were good. 63% rise in revenue, but that wasn't enough for a stock that's higher by 150% so far this year and trades at a sales to price ratio of 85. The average stock in the NASDAQ is at 3.5. Bloomberg Dollar Spot, that goes higher, gaining this morning as your 10-year yield falls by 2 basis points. That's it for your Bloomberg Brief. Surveillance is up ahead. This is Bloomberg.